What's going on, traders? Hope you all had a great day. It is Thursday, July 20th, and we'll be doing an analysis of the S&P 500, this SPDR ETF. Before we get into it, reminder that this video is for educational and entertainment purposes only, and in no way should be misconstrued as financial advice. All right, so let's get into it. Markets were down today, about 0.66%, about $3. Final print coming in at 452.18. And we're starting off here with the macro, looking at the daily chart. Markets here now starting to move into back into value, just tapping this value area high here, and we'll have to see how things develop over the next couple of days. Of course, tomorrow is OPEX. But I want to see if this 9-period moving average starts to move up a little bit more, because there is a probability, a slight chance, that if we do continue to sell, that we just come down and retest that 9-period moving average. Now, will we break? I don't know. We could find some buyers in this area, but let's wait and see. However, it is nice to see a pullback starting to take place in the markets, a little cool down, much needed for a little factory reset, and that can give us the opportunity to then move up higher overall, which is where I do think we are going. We'll have to see, if this area is supported. If not, the big next magnet zone, and we've been talking about this potentiality of maybe coming down. First stop could be around this area here, around the 447, and if that breaks, I'll be targeting and looking here for that 444, which was really my main target that I was looking at for that short trade. I did open up some August monthly puts today, 440s. Do I think we're going to go to 440? I'm not sure, but I still will collect a nice profit even if we come down into only the 9, or even if we do hit that 447.30 area at the top of the July 12th candle. Otherwise, again, I'm just looking for a retest of this major breakout here, as we've already gone over in the 444 area. This will probably change, but as of how things stand right now, nice confluence with the 20-day period moving average right at that key level, which really caused this breakout over the last few days. All right, so we are still keeping an eye on the Momo. We haven't seen any bit of weakness yet come into the Momo, but we are still sitting in that overbought area. So we'll be watching to see if the momentum starts to shift and we start to see that color change. That would be the ideal scenario for the bears, but we still are greatly oversold on the weekly, and we'll go over that as on the weekend's video. I'm sure not too much has changed there, but we'll see how the week closes. The other thing I wanted to look at here on the macro is another chart that we've had our eyes on. Of course, this major trend line, which I took the first short at, and I ended up getting stopped out on, but we were talking about this potential scenario of what happened last July. Here's that yellow trend line that I tried to short against. Of course, obviously that didn't work out, but I am in short again as a little bit of a hedge for some of my long positions, but we're starting to see the potentiality of a possible not a repeat of what we saw here. Now, I have to mention picking tops really is a riskier trade. It's technically I would have to say kind of a foolish trade, to be honest with you. But whenever I do take counter trend trades, I always do it smaller, and I understand my risk and the low probability odds of the trade actually working itself out. With that being said, if we do break back below this trend line, you could potentially still have an opportunity for the short trade here. As you can see, and we went over this in the last video over a couple of times, but the way you can, someone could potentially trade this is waiting for that break below the retest where you take the short, right? So, you don't need to pick a top. Like I said, really more often than not, it is more luck if you do get the top, because no one really can pick the top or bottom of everything, and waiting for that clear confirmation is the true way to go. But you do still potentially get those opportunities with the retests, as we can see here 2 years ago. So I'll be watching for that as well to see if that develops. But I'm already in, so we'll see what happens over the coming into the end of the month here. We do have OPEX tomorrow, so another thing that I want to raise the alarm about. So let's just be a little bit extra cautious overall in the markets, but we'll see if this trend line does in fact break, we get a retest, and then potentially see more selling come into the markets, right? For the bears, now of course this is a little bit bigger picture. For the bulls, something I am going to be watching tomorrow. This daily candle, although not as full-bodied as I potentially would have liked to see it, but we can still apply these 50%, 25% rules on. And actually, let me go to another chart really quickly to illustrate this. Would be we could see a bit of a bounce tomorrow, but I want to see if bears can hold below the 50% line of this candle. If we start to get over the 50% line of the candle, that is a little bit more bullish, I would say, potentially putting in a lower, higher low. However, we could stall. We could only go up. Maybe we could potentially go up 75%, and then really still be putting in a lower high with a new trend starting to be developed. The thing the bears would most like to see, or the strongest move for the bears, if we do see a bounce, would only be a 25% retracement, a candle that bounces maybe just up into this area here, maybe 450, the 450 240, something like that, and closing here in that type of area to make a bear flag on the daily for a potential move back to the downside. So I'll be watching that as well. But we are in a really interesting spot right now. Let's take a look at our macro chart and some of the big picture here on our daily trends. We are coming right into our first major bullish pivot here. And you can see today we did a little look below and fail, but not too much buying there at the end of the day. Of course, Netflix and Tesla were pretty much decimated today after their earnings reports, and Tesla was down almost 10%. I think it closed down 9.74%, and Netflix was down, I think, about 7 or 8% throughout the day. So they were really leading the charge lower. Apple was down almost 1%, and Microsoft and Amazon really are getting hammered today as well. Some nice rotation, though, into some of the Dow names. Goldman Sachs was pretty strong today. Boeing had a nice day. Bank of America has been doing well. So we'll be keeping an eye on financials and some of those Dow names, as we could be seeing a bit of rotation out of tech and maybe into some of the names like that. Energy was also strong today. XLE was up with healthcare as well. But you can see here where we basically broke above this major trend line and looking like a failed breakout above this trend line. But we've been waiting for this pullback to start to come in, normal, healthy. I don't think it's time for the bears to start celebrating just yet. We're still above all the key moving averages. So as far as the key short-term moving averages. So until these are really breached, can't get too bearish, and even breaking the 20, there's still so many levels below that would really need to get taken out for the bulls to have a super strong sell move. But if we even come down and touch the 9, we'll take that. And even if we come to the 20, we'll take that as well. And you can see, as I was mentioning before, how nicely, as far as right now, this obviously probably will move as price action moves, but really nice confluence with the 20 period moving average right around that 444 area. That big bullish pivot. So we'll see how that develops. All right, so let's get into some of the price action from today and how the plan worked out, as well as what we are looking for into tomorrow. But again, as I mentioned, OPEX tomorrow, so let's be a little bit careful. All right, so let's dig into it. All right, first thing that I wanted to point out, we're in an interesting spot. You saw on the other chart, we were coming into that first key pivot for the bulls to possibly defend. And from this more shorter time frame perspective, we talk about this in a few of the other videos that where liquidity lies outside of these trend balance zones. Obviously balanced trend, etc. We've been over that quite a bit. But you can see pretty much that that's where we found some leftover liquidity today, as markets came right into our previous balance zone, and that's where we did find some short covering and responsive buying right into the close. So let me actually get out of the hourly as I just go over today's price action very quickly, and then what I am looking for, a couple of potential trades that may present themselves tomorrow. All right, so in the morning, let me zoom in a little bit more. All right, in the morning, we did have a nice move right off this 25% quadrant here, rallied up nicely in the morning. Now, I did take this flag long. My mistake was not waiting for a little bit extra confirmation, a little bit more time for us to really establish a bid under the under that 440 454.83, and we really never got over 455. So I kind of jumped the gun there a little preemptively, and I of course got stopped out of that long trade here. Next thing I did was I waited. We broke that range. And I waited for buyers to come back in for the retest into that 25% quadrant. However, as you can see, we did not roll over. We actually ended up continuing, and I got stopped out. So for me, there were two trades right there that didn't work. I was a little bit frustrated, and I walked away from the screens so that way I didn't overtrade, and just so that I could reset my mental state. I think that's very important for traders to be able to understand, and when you're getting frustrated. So you just walk away, and I've been there so many times, as I'm sure many traders have. You take 2 losses or 3 losses, you start to get really, upset. You start oversizing, making really poor decisions, and then you take whatever it is, a 500 red day, a 200 red day, $1,000 red day, and you turn it into a $3,000 red day, and that's just never where you want to be. So I did take this trade, got stopped out, and then I walked away. Maybe I should not have, because another 2 opportunities did present themselves for the short trade. And something else that I wanted to mention, when you're coming into the lower part of this range, yes, there is a warning sign that you did not get over the call trigger, but they can offer a nice long opportunity with low risk if you are down at the lower part of the range, trying to get your first target back up here to the 50% half gap, and then potentially break over. and then come up to the upper part of the range. And conversely, you can, if we're coming to this upper part of the range, this area can act as potential shorts too. But you are counter trading at that point. So just like I said before on the short trades, know your risk, counter trend trades, lower probability. So you got to make sure you are sized correctly and pretty much understand that since you are going against the trend, you have a higher possibility of getting stopped out of that trade. But as you can see here, we came right back in to retest the half gap, also created a lower high. A direct short here could have potentially worked for that move back down into the lower 25% quadrant. Now, this is really the trade, and unfortunately, when I got back to the screens, this move had already started taking place, unfortunately. But the ideas were out there for the trade to be executed on. This is what I was anticipating, or this is what I was looking for to happen earlier in the day. Unfortunately, I did not get it, but you can see here we came back down. We did a couple of fake breaks. They tried to break over that 25% quadrant of our balance, and nice confluence here, right to short, be also shorting into the 9 and 20 period moving averages, and then we got the move to the downside. And I was looking at a few targets that I did also post on my Twitter. Let me just get that up right now really quickly. Here we go. And we did hit all of our take profit levels to the short side right here, down at 452.30, 452, and then we got real close to that 451.35 area. Didn't quite get there, but pretty close. So it was nice to see that trade thesis work out so nicely. But as for tomorrow, so what am I looking at for my plan? Well, we've got a couple of different scenarios, so a couple of different ways that you could potentially be playing this. One thing is that, I showed you on the macro chart that big trend line, that big key support area for the bulls to potentially defend. And the other thing is that we are coming back into the top part of this base. Now, I don't really know, there's a possibility that maybe we sell down tomorrow, we break below here, come into this 25% quadrant, and then we push back up, or we rally up higher and come into this area, back test the range again, and then roll over. That's anybody's guess. But as far as the plan is concerned, yes, if we do come down into this area, there is a potential that I might take another stab at the longs down here in this 450, 136, 451 area. If a direct long sounds too risky, you could always look for a look below and fail. It breaks below, maybe clips 451, gets under that, recaptures both these levels, and then potentially initiate the long. That's another way to trade it. The other way to potentially trade the long is if we do confirm back over into this range. So we'd have to get back over 453.40, 453.73, getting back over this zone, hanging out for a little bit, showing the bids their support in the market, and then we could look for a potential move back into volume point of control here. Of course, this might be a bit different tomorrow, but let's keep our eye on 454.20, 454. Getting back over that, next target here would be the 450, 454, 83, 455 area. And if we can get over that, same targets before, as we come into the highs, pre-market highs from yesterday, and then ultimately trying to tag the upper part of this range. Now, so that's what I will be looking at. for the shorts, okay, so you do have a potential move that if we do just come up into this area, yes, again, we could potentially be looking at shorts. So we come into this area, maybe take a half position or the full position with your risk right here, but looking for potentially the price to come back up and come into here and then roll back over again. So that is one way you could trade that. If we do get into the half gap, another short there could potentially be something that I would look at as well. We'll have to see where the volume point of control is tomorrow, but even shorting against that might be a play that I would be interested in, depending on what the rest of the market is doing. For more of a breakout trade for the shorts, getting back below 451, I think waiting then to see if we get some counter buy reactions back into this level, taking the short here, and then looking for 450, the half gap of this range, and then targeting the lower part of this range down by 458.90, 459, or excuse me, 449, and then if that breaks, looking at that 448.50s area. So yeah, that's pretty much what I will be looking at tomorrow. A couple of different ways to potentially play the market. Who knows what will happen if we do end up getting into any of these previous balance zones again. There's even the chance that we just bang back and forth here on a you know, a $2 or $3 range, just between 451 and 453 453.75. So there's also that potentiality as well, that we just trade sideways. As I mentioned before, it is OPEX tomorrow, so it'll be nice just to err on the side of caution, maybe 1-2 trades at the most, and then get out of there and start the weekend. So the only other thing I think I wanted to point out, we'll just take a quick peek at our day trading fibs very quickly, and you can see what happened today when we did break the range. It doesn't line up perfectly, but pretty damn close. The 23.6 here at the 453.48. Let's go back into our balance really quick. Let's see, for 453.48, 453.40. Okay, so you can see how that lines up pretty nicely. And then once we break that 23.6, we sold right down into the 38.2 right here, and that was the previous, the top of the previous balance, like we just talked about. So, wait to see again if this recaptures. That would be, a little bit more of a bullish sign. But definitely a couple ways you could play the longs and the shorts tomorrow. Let's get in, get out, get paid, and start the weekend. So I hope the plan helped. If you'd be so kind, don't forget to like the video. It really helps us out on YouTube, pushing these videos out further. And if you're enjoying the content, a simple hit of that subscription button would mean the world to me. Yeah, so hope you have a good rest of your night. Take care, and let's have a great Friday.